Goeiedag, dit is de tweede KoersKompas podcast. Dit keer heb ik een heel speciale gast, Paul Goranson van EnCore Energy, de CEO nog wel. Ik ga met hem praten over de uraniummarkt, maar natuurlijk over het bedrijf zelf dat hij leidt. Ehm, we hebben maar een relatief korte periode met hem te praten, 40 minuten. Dus ik ga daar proberen het meeste van te maken. En we gaan er rechtstreeks aan vliegen. Paul, thank you for coming on the show. I appreciate it a whole lot.
No problem. Glad to be here.
So I'm just gonna go with it here. I've compiled a list of 10 questions. I'll just start it off. Concerning Rosita, the first plant you guys started up, how much does it produce in the second quarter of this year? How much has also Alta Mesa produced in the same period, and how much do you expect for the rest of the year?
So Rosita produced roughly 36,000 pounds in the second quarter. Alta Mesa, we did not state any production numbers because even though we've got yellow cake accumulating because the quarter ended June 30th, we started it up on June 12th. We did not have dried pounds to be able to call them production. And we've accumulated quite a bit of in-process inventory right now, well over 100,000 pounds at Alta Mesa, but we haven't started drying yet, so we haven't actually declared or stated what our production numbers are. I prefer to report dried pounds rather than in-process inventories because you got a more precise number. So we'll have some numbers coming out for the third quarter that'll be reflective of dried production, but I don't know what that number is going to be. It depends on how much we actually dried during the quarter. And for the year, we expect to have produced roughly 300,000 pounds total, about 250 to our account. Because keep in mind, Boss Energy has a 30%. It'd be a little over 300, but we had a little later start at Alta Mesa than I anticipated. So we're trying to make ground. I've been very happy with the production we're seeing at Alta Mesa, very happy. And we just need to keep increasing capacity and production. So that's kind of what we're doing for the balance of the year.
What are the all-in sustaining costs for Rosita, and how does it compare to the all-in sustaining costs of last cycle?
Well, the costs are going to be higher. As you know, if you read through the quarterly, we didn't actually state an all-in sustaining cost, talked about cost of goods sold, which doesn't necessarily always reflective of the same two things. But the all-in sustaining costs will be much higher now than they were back in the last cycle, simply because of just dramatic inflation and just cost of labor and everything else. We're still all-in sustaining costs is still sub $50 a pound at Rosita. I expect that once we get Alta Mesa up to roughly over 500,000 pounds per year, and we'll see Rosita also ramp up in production when we have Upper Spring Creek come online, you'll see numbers that are superior to that $50 a pound, somewhere closer to the low 40s. But we're currently just kind of ramping up production, which makes everything look a little uglier. And at Rosita, we've had some, as we stated in the press release that went with the quarterly results. We've seen some production inefficiencies at Rosita we do not see at Alta Mesa, and that's basically on recoveries on certain portions of the well field. We're still evaluating on that. We've learned some lessons from that, applied them at Alta Mesa and at Upper Spring Creek, which is the next feed for Rosita. We expect to get that going in the first half of 2025.
You guys sold a portion of Alta Mesa to Boss Energy. You guys are using those proceeds to move further along with your other projects to speed those up. How's that process coming along?
It's coming along pretty well. The only thing that's keeping us from fully executing everything we want to do is that we have a shortage of drilling rigs. And if you know our business, we rely heavily on being able to drill and stay ahead of depletion, as well as expand production. We've been able to add significantly to our rig count over the last, since we closed the deal with Boss, probably doubling the number of drill rigs we have, but we're still looking to execute with more. And, but it allows us to, currently we're advancing Upper Spring Creek, Alta Mesa, we're speeding up, doing additional drilling out at Alta Mesa to expand the resources, as well as, we're starting a drilling program up in Wyoming at Gas Hills. It's a small program, and doing a program at what we call the Dewey Terrace product, which is basically Dewey Burdock, extension of Dewey Burdock into Wyoming.
Right. Are you confident that EnCore is going to be able to deliver on their sales commitment? You also
Yes.
bought a little bit of uranium this year, I saw.
So we've been delivering into our contracts. We haven't missed a delivery yet, but we've been relying on, and partially some produced pounds, but also purchased pounds. I expect we'll be 100% produced pounds going into 25 to deliver into our agreements. We have a very good handle on what we need to deliver. And I'm confident that we'll be delivering out of produced pounds for all of 2025. The second half will be another mix of purchased pounds, but more produced pounds on a proportional basis, roughly 50-50. And for the second half of this year.
Right. Now that you guys are producing free cash flow, which I guess in junior mining is a rarity in a way, are your M&A plans maybe changing? Are you going to get aggressive again in M&A? Because there might be some interesting things coming up, takeovers of companies that are maybe in a less fortunate spot here.
We haven't given up on M&A, as you know. We're still focused. We're still looking at the opportunities. Some of what people would like, what I hear from the several of the retail investors that with ideas about where we should be, thoughts about where good M&A targets are. Again, it takes a willing dance partner. There's some that are more willing than others, but the ones that are more willing aren't necessarily assets we want into our portfolio.
Right.
So we're pretty picky, but we're constantly looking for M&A opportunities. And I don't want to rule out also, we're doing actual acquisitions of assets from private parties.
Right.
To expand our base. So there's kind of a twofold. So the cash we got from the Boss transaction is giving us more flexibility to go out and try to acquire these assets. And we've been very successful so far. Again, everything goes into negotiations. So the negotiations aren't done, but we expect to close on some before the end of the year. Those will be fairly significant for us. But again, because they're with private parties, we're not able to talk about it terribly much other than we've got these processes going on. From the public company side, there's opportunities out there, but again, you can probably count on one hand a number of potential opportunities and not even use all your fingers.
What about the chemical assets?
Which one?
The chemical assets in America. Is there still any opportunity? Have you guys looked at that further? I know you've looked at them, but
well, I know those assets very well because I used to be in charge of them for a while.
Yeah.
And from the perspective of Cameco's assets, you always have to understand they come with a significant liability and a cost.
Yeah.
And we have looked at them. We put in some offers, but again, it's Cameco does not make decisions overnight.
No.
And they look at it. They look at every single aspect. And so far, we haven't really been able to move the needle on what I would call asset acquisitions from Cameco. But there's some very good ones there that I believe that are well worth going after.
Yeah.
The challenge is that Cameco ultimate goal is to be relieved of that liability, and how do you get relieved of that liability is very difficult because it's such a big number.
Right. Your overall cost structure in the entire company, how does it compare with industry peers like UR Energy and maybe other ISR companies in, for instance, Australia?
I haven't really looked at Australia very closely. I think we compare pretty well. Everybody has different strategies, so our cost structure is going to focus on our strategy, which is in addition to production, advancing production. Again, I talked about these acquisitions, and we've got quite a few properties that we currently have in our portfolio. One of the things that we haven't done is given up on, basically divesting some of our non-core assets. Hopefully we'll get some realistic opportunities doing that, but for the moment, we still have some value there for us. But our cost structure is comparable to others, in my opinion. But everybody's unique. You can't necessarily compare us to say another ISR company solely focused in Wyoming because we're focused across several jurisdictions.
Right.
Texas, Wyoming, South Dakota, Arizona, New Mexico. And so all those have different strategic needs, and you can't compare us against some of the other companies like that do conventional mining because their assets are entirely different. So I would say that we compare well on a general basis, but there will be definite differences in the what their strategies are versus ours.
Right. I'm gonna go a little bit more the macro, the 20,000 feet view here. How much uranium do you think the U.S. can produce, let's say, by the end of this decade in a let's say an optimistic, realistic scenario?
I think optimistically we could do 4.5, 5, maybe 6 million pounds by the end of the decade.
The entire that's you guys.
Well, technically, if like say you can get up to 8 million pounds alone with just one conventional mill, then maybe it'd be closer to 12 million pounds.
Right.
I don't expect, unless there's a dramatic change in regulatory environment, I don't expect us to get to 26 million pounds over, in that period of time, simply because everything takes time to bring in, and the regulatory environment for uranium properties is fairly rigorous.
Yeah, getting it to 20 million pounds, let alone above, is going to take a very, very long time. But I'm sure you guys can get it to 6 or 7, maybe by the end of the decade, combining.
Yeah.
You are a legend in the ISR industry, I dare say, and
Allegedly.
well, I'd say so. What's going on in Kazakhstan? Because uranium is really macro driven, I guess. The underlying prices and the volatility inherent is so important to where also the price of the stocks of the companies and everything is going to go. And Kazakhstan seems to be very important when it comes to that, because the biggest producer, it seems to be a little stuck at the moment. It's not really doing its thing as it was once a whole time ago. What's going on there? Are these things structural? What can we expect, and what are the implications for investors here, globally speaking?
My opinion is that you're not going to see big moves and increases in production in Kazakhstan coming out of Kazatomprom. They basically got the easy stuff out. The JV EnCore is probably the most promising for a big project, but that's still years out. All the growth, when we saw Kazatomprom pull out the results, and they showed a little bit higher 2024 than what guidance than what was from the prior guidance. That was strictly for the production coming out of Budskaya 6 and 7, and that's 100% for Russia. That's a new project. Everywhere else, you have mature projects that have been on for quite some time, and what the Kazakhs did not do for a while was invest in resource replacement. And so it's very hard for them to stay up with it. Now that they're kind of caught behind that resource replacement. It was very easy when you got new projects to continue to increase production and production and production. once you get to a point, it's very hard to keep it stable or try to make significant moves to increase production without bringing on an entirely new ore body. And they just don't have that much coming on immediately. And so I think what we're going to see is kind of they'll keep guiding up a little bit, and they'll probably be tweaking up, but it'll all be production coming out of like the Buzskaya project, and which obviously is not going to hit the Western market. People like to hear that, but it's not going to hit hear that the new production.
Go
They
to
want to hear
China.
it, and they inflate it to the Western world, but it's not going to see a Western flag on it at all. And it doesn't displace or free up material for the Russians elsewhere. It's all being taken. And so I think that the hopes, or some people are the expectations that the Kazakhs are going to be big movers in the market. I don't think that's going to be the case. And the other thing is their cost of production has gone up dramatically over the last few years. It's more than doubled. And
Also, the new
back when it was the
taxes.
cheapest stuff. What's that?
Also, the new taxes and everything.
The new taxes is another factor on top of that. So that's going to make their product more expensive, and they're going to have to seek a higher return, which they're getting right now. Selling uranium at $80 a pound is nothing to sneeze at. But the reality is that if you had to think about one source of production, setting the base, what would be, I would say, the floor production cost, you're probably still talking now in the 30s, where the MET, where in the past it was down in the low 20s, if you recall.
Right.
And so I just don't think they're going to be they're not going to be the catalyst mover that they have been in the past, simply because there's not much movement they can do upward. And they certainly don't want to do much movement downward, because they want to supply as much as they can and get as much revenue as possible.
They're gonna plateau for a long time, maybe.
Yeah, it's just going to be very hard. There'll be little bumps where they go up, and there'll be a little valley, little ditches and everything else. But they're going to be kind of in that range, and it's going to be a band of, that 65 million pounds roughly. They're going to fluctuate between 60 and 65 million pounds. And it won't be the end of the world if they had 60 and 65 million pounds, or even 66 million pounds. It certainly won't be the other way either.
Yeah. Any thoughts on the driving force behind this bull market? Allegedly, the contracting cycle, which is not really starting off too hot so far. It's utilities seem to be really waiting it out. I think they've been punished for buying supposedly high prices in the past, and they're looking for it to come down again, as it always has. But I guess what they're missing is the structural shortage of uranium, and it's a different ball game now. Well, what are you thinking?
I don't think they missed on the structural deficit that's out there for uranium. I think that with respect to the utilities, if I wanted to, I could go out and sell 100% of my forward production at prices higher than what the spot price is today, but it won't be the prices that I think we should get going out in the future. Plus, I don't want to be that tied up. What I'm getting at is there is demand, but the demand sits at 2028 and beyond, and because a lot of them, there's some very short-term demand. I could sell everything I wanted to in 26 and 25 and get a decent price for it. Certainly not $100 a pound, but I could get something up in the higher 80s if I wanted to. But the reality is everything is not being done through a public process. And there are contracts being signed with counterparties that aren't being public, that have premium numbers in them, that's not moving the needle, so to speak, on the term price. And so I think that we're going to see more movement and more establishment of a higher term price. The spot price, that's going to be picking up, I would say, in late September, or early to mid-September, solely because people get back into work. It's always slow during the summer. People go on vacation. You would think that there'd be like a like a typical commodities market, that would be the case. But we don't have a typical market. It's very illiquid. Small volumes make big moves, and because it's small volumes driving things, people have to be at the wheel, and there's a very small group of people that are the market, so to speak. And if they're not looking for anything, then the price goes down until it gets someone's attention. But it's not what I would call it's not a liquid market. It's certainly not a good commodity market, because if we were in a good commodity market, you'd get some real good forecasting on what was going to happen, and we would have actually an active futures market, but we don't.
Yeah.
And so I think that we're going to see as higher spot prices coming up in the spring as people try to fill material needs for 25 and 26 out of the spot market. But I think you're going to see continued contracting, but you're going to see a lot of upward pressure on the term price. It's not going to be directly driving the spot price, but you'll see that the movement in the term price inching up as the price reporters figure out what's going on. And that's the challenge, is that it used to be that I would get phone calls every week from the price reporters on, did you sell? Did you sell? You know, did you contract? We don't get those phone calls anymore. And they rely on, the brokers for the spot price. And I think they rely on people voluntarily telling them that they've signed a contract or something and the general terms. But if you don't tell them, then it doesn't go into the bucket, so to speak.
Right.
And there's reasons why people don't want to say that they're contracting for their own reasons. I mean, we love to talk about what we're doing, but now it's kind of mundane. It's almost like business isn't usual. We're trying to fill our book for 50% or less of our production going forward out on a rolling 10-year plan. And so we are doing small deals to fill in holes and fill in gaps, so we don't get too overextended, but we're focusing on floor prices or very high base prices. And we've been successful.
Yeah.
And but the main thing is that I'm preparing, the one thing we do as a company is we don't want to limit our upside, but we want to protect us on the downside. And that's what this contracting is doing. Is assure that we're protected on the downside if the market changes radically. We all know the thesis is solid on the bull market and on the growth of nuclear, which means the growth of uranium. There's nothing that I see that's going to change that. But having been in a prior company where we relied solely on spot sales, it creates a dynamic when there is no spot market like we've had this summer. If I had tried to sell uranium into the spot market this summer, it could have driven the price down below 81 or below 80, only because I need to sell. No one needs to buy right now, but there will be willing buyers coming into the market.
Yeah, the spot market often looks like a little bit like a trader's ping pong game every now and then.
It is.
Yeah.
That's one good thing that spot did, was it took a lot of what I call the froth out of the market.
Yeah.
Back before spot got very active, there was a lot of pricing and arbitraging going on. It looked like there was a lot of volume in the spot market. But what it was the same uranium being going back and forth between traders as they try to flip and make their clip on top of that to keep their lights on. So they need a lot of transactions. We see a lot less of that now, simply because the spot cleaned out the froth, the foam in the market.
Right. But when I got into this trade, I think, investment, it's not trade. I think it was 2018, 2019 or something. And it was more based on not so much demand growth, but more or less the price being too low. So I thought it was going to mean revert, but now it's the thesis has evolved. Now there's a nuclear renaissance. There's maybe going to be 5% or 4%, whatever growth in nuclear demand, uranium demand. That's very significant. What is this change for the cycle? Has it been prolonged? Because that's probably my opinion that maybe this is going to be nothing like the 2000 where it just spiked and went back down. Maybe this is going to be like a plateau, like in the 70s where it was at a high price for like half a decade.
I agree with you. It's going to be different, and the reason why is we have a lot different players in the market right now than we had back in the '05 through '09 period, or actually all the way to 2010, yeah, '09. And that was the financial hedge funds coming in to buy up uranium, and they created basically a frenzy, feeding frenzy. Everybody wanted to do it. And that created a situation where, and then if you look where the spike dropped off, that's coincides with the collapse of the banking system in the United States, where margin calls were made and all, and the hedge funds had to dump their uranium.
Yeah.
And let's put, they probably had 10 million or maybe 100, 20 million pounds held by the hedge funds at that time, but they had to liquidate their assets to make their margin calls. And that's what the precipitous drop was off the spike. And then after that, that material cleared the market, you see it came back up into the 70s. That would have been what I would call the base number. That would have been the real supply demand number until Fukushima happened. And what we're not seeing it right now is that spikiness is because you don't have the markets have changed. The investment markets and particularly the hedge funds have focused on different things. And right now, uranium's just not as sexy as it was. There are some hedge funds involved, but they're certainly not being as aggressively buying as we saw back in the past because they don't know where things are going to go. And the thought that we're going to get to $200 per pound uranium by the end of this year or in 25 hasn't really the momentum to drive that hasn't there. But if we start seeing movement in the price again, they will start coming back in and looking to buy to get a better position. And that kind of create this flywheel effect where the price continues to move up as it's being bid up, as supply still stays relatively not stagnant growing, but not growing leaps and bounds, trying to meet increased demand, not only from the utilities, but from the hedge funds and the financial players and other producers too. There's producers will be getting into the market too. I think what we've seen lately over the summer, which has been kind of flattening the market, is some of the producers who bought uranium have been selling it back into the market, and that's what's been kind of suppressing the spot price. That's why we moved 90 down into the 80s. Is because of producer selling, like Denison, UEC, others, URC, selling material into the market to cover, basically to help keep their lights on without having to do an equity raise.
Yeah, I guess what should give current investors a lot of confidence in the T's, at least that's the case for me, is that the long-term reference prices keeps ticking up month after month, and this is on not that big a volume. There's a lot of more buying that's going to happen over the rest of the decade. So I think that should only, if you look at the market structure, that's a very positive thing, and that is something that really investors should keep in mind when being confronted with this daily volatility. Of course, mostly in the uranium stocks. What are you thinking about the stocks here? Are they cheap again?
I think they're cheap again. This is just my opinion. That's all it is.
Sure.
And I think they're cheap again. You saw basically just the collapse in all the equities across the board that impact the uranium side as well. But I think we've seen that we've hit bottom, and I don't think we've seen I don't think we're seeing a dead cat bounce right now. I think it's just kind of the normal. But I see that we hit the bottom. We seem to see resistance at where the price has got, and it looks like everybody, pretty much at least the trades I follow have improved. Basically, that curve has changed and to bounce back up, and I think we'll start to see a continuing improvement on the equity side. Basically, we had to clear a lot of desperate sellers, and we got some very fortunate buyers out there who bought cheap. And but I think that it'll start to continue to move back up, and we'll see what happens after, if the spot price starts to move like we expect it will, maybe that's a catalyst for more movement on the equity side.
Yeah. Where's the price you think gonna be your best guess in let's say 6 months?
That's a good question because there's so many factors that can go into it, and somewhat it's you almost have to get lucky to get the guess right. I think we'll be back up in the 90s next 6 months.
Right. Yeah. Before we wrap this up, Paul, is there anything that I missed that you think is that the people should know that are watching this, listening to this? What's going on here that maybe people are not paying enough attention to, or that they're just totally missing? Tell me.
Well, I think what people need to look at is with respect to when they make their decisions, whether it's EnCore or anybody else, look at the strategy the company has relative to what the market's the market expectations are. When I say that, I'm talking about the uranium market. We see a constant continued increasing demand year by year going out. We don't see it dropping off. That provides an opportunity for companies that have real production plans to get revenue and also very likely realize higher prices. And I think that needs to be watched. It's amazing, and I'm focused on the U.S. a lot because that's where I do most of my business, pretty much all my business. But we've seen, I was telling somebody the other day that when I got in this business and all the way through the late 90s, actually in the 2000 up till 2010, we had 104 operating reactors in the United States. We were consuming 45 to 50 million pounds per year of uranium to power that electricity. We're now down to 94 reactors now, and in 2023, we're still consuming 45 to 50 million pounds of uranium. Even though there's fewer reactors, the demand has remained there for the fuel. And that support, and as we talk about life extensions and we talk about restarting older power plants that are on their way to be decommissioned, that's more demand, but that's longer demand than a lot of the, I would say, whether it's WNA's uranium report or any of the uranium trade report, the price reporters, their models and everything, those are new factors that aren't in there. And I expect we'll see life extensions in Europe for a lot of the reactors, and even some new builds coming obviously out of Asia. The Chinese just announced a big investment in additional nuclear. That's got to have a catalyst effect over a period of time, because that's going to be a demand pull on the market that wasn't in the models last year. And so I think that that's when you're looking at the opportunity is we've got the fundamental, the market, the industry fundamentals for uranium remain solid and also growing. And there's going to be a lot of opportunities to be able to see real growth and investment, and through equities and other ways to be able to realize in other words, to also realize that gain that we see coming in the market. From EnCore's perspective, we want to be generating revenue to cover all our expenses rather than go to the market. And we're on our way to do that. This mining business is not easy, but there's a reason why when you go look at the NPV and the fundamental financial aspects of mining, you see triple-digit net present values and huge internal rates of returns, because it's high risk but high reward. And so that's why I think that there's a real opportunity here, and we just need to keep that in mind.
Right. Before I let you go, one short, quick question. I can't help it, but I need to ask. Can you put a percentage maybe on what do you think the odds are of a like a spike scenario where but I guess it's what people have been in here for, have been looking out for, have been putting uranium at the #1 spot of their investment roster, thinking that it's going to be at one point a certain panic or anything that's going to drive up the price. Can you maybe put some odds on that? Let's say maybe in the next 3 years or whatever.
Well, so I would say that it's probably the chance of having a spike and a run up are probably as good as not having one. So I think that we're going to see a spike occurring, and it's going to be within the 3 years. And I think it's probably a better than 50% chance, probably a 60-40 chance that we'll see that in the next 3 years.
Yeah, that sounds pretty good. Whether we get a spike or not, it's going to be very constructive in your area in uranium. And lastly, I want to just thank you for taking the time yet again to speak to me and to my audience now that I'm now building. Thanks a lot, and I will speak to you down the road.
You bet. Thanks a lot. Have a good one.
Thanks.
Enjoyed it.